Personally, I've been involved in many private lenders who've started up. I'm not going to say I taught them how to do it, but I definitely was an integral part of their team as they were building up and figuring out what they want to do as a private lender. For all of our referrals and our clients, I like to think that we're partners exactly because we don't bill by the hour.
Hi there, and welcome to another episode of the Ask a Private Lender podcast. As always, Lawrence from Mortgage Automator, joined by my partner, Joseph. And today we have a really great guest for you. I think it's someone you're going to get a lot of value from, Joseph Berljawsky from Diamond and Diamond. So Joseph, thank you for stopping by today.
Thanks for having me.
So we hear the name Diamond and Diamond, and I think all of our minds go in one direction, and that's personal injury, right? So I'm sure a lot of people are wondering, why do you have a lawyer from a personal injury firm on your podcast today? But what's surprising even to me when I first found out was that Diamond and Diamond is actually one of the largest real estate firms in the country. Is that I have that right, Joseph? Or
yeah, absolutely. Residential real estate firms, for sure.
Residential, correct.
Yeah.
So I mean, that was interesting to me. I didn't know that at first when we first started chatting with you, but as I've grown to find out, I mean, a lot of the larger lenders are actually using you and your services to close their real estate transactions. So that was interesting. Why don't you tell us, like, how did Diamond and Diamond get into the real estate world? Because I mean, they're known for personal injury. I think everyone, when they hear Diamond and Diamond, that's where their mind goes.
Yeah, I mean, the history of it was I had my own law firm. We were doing pretty much exclusively real estate. And we started to talk to Diamond Diamond. I always had in my head that what they did for personal injury should happen in real estate. You know, big firm resources for transaction work. It's very hard to do real estate in a small shop, right? There's so many moving parts to it. Whether it's suing because something went wrong, or moving money around in the trust, and everything from reporting to manpower. So we always thought the big firm would be a big help, and the advertising to get the word out was also part of the fit. But really the real reason we thought it was a very good fit for our firm is because Diamond Diamond is a bunch of lawyers, right? You know, you hear Diamond and Diamond and you think personal injury, but you don't realize that behind the scenes there's 50 personal injury lawyers and 200 staff, and it's a big personal injury law firm that does a lot of good litigation, and they were the first ones to start giving lawyers cell phone numbers out for personal injury files. You know, they maybe not the first ones, but they would give out they would insist on every lawyer giving every client their cell phone numbers so that the clients can call the lawyers. And I thought that's a perfect fit with real estate. You know, that it's very lawyer heavy, lawyer driven. You know, private lenders want to call their lawyer, and that was really how we set up our firm. And with that, you know, on a larger scale, we thought it would jive well.
Yeah, that's interesting. I think it's definitely a different approach. I think that most law firms, they have you dealing with the clerks there, right? Very seldomly do you have that personal relationship with the lawyer themselves, and when you're going through your transactions, you're actually dealing directly with the lawyer. So I think it's definitely a good strategy. Obviously, it doesn't hurt to have that marketing machine behind you as well. I mean, Diamond and Diamond, they're master marketers, right? I mean, that's how they pretty much grew. So on the real estate side, how many lawyers are there, and are you guys all across Canada or in certain areas?
So we're 10 lawyers. We're about 50 staff overall in real estate alone. And Diamond Diamond has 6 offices in Ontario, and I think 12 total across the country. So we operate in all of the Ontario ones, and we're just setting up Alberta and BC right now for real estate. And then the goal is to make it a national solution for people, for sure.
Very interesting. That's very interesting. And obviously not to speak about your existing clientele, but from a transactional perspective, when a new client comes to you, and they want to test you out, maybe they want to hire you for their legal files. What sort of an interaction is it ahead of time? Do you have to do a meet and greet? Do you have to know what their expectations are? Can they just start sending in files and learning as they go? What's the process?
So one of the nice things about being a real estate lawyer is that we don't bill hourly. We've always looked at our clients and our closings as just things we have to service. So sometimes, whether it's a private lender or a regular real estate deal, and it's a first-time home buyer or whatever, some clients take more time, some clients take less time, but we don't care. We just service all of the deals as they come through. And some are preliminary, even before the deal comes to fruition. Sometimes it's during, sometimes it's after. And just, because we're talking about private lenders in particular, the first thing we do when we meet a new private lender, obviously we have to have a conversation, make sure there's a fit. They have to meet the private lending team. The first thing we do is we get a look at all of their documents. So, their loan commitments for sure. If they're, administrator, we look at their servicing, participation agreements, whatever documents they have that they run their practice with. We always take a look at those. We don't usually charge for that kind of stuff. We just, I look myself from a transactional perspective. The litigators take a look from a litigation perspective. And then we give them feedback. And then I always just tell them, try a deal. We've got to work out the kinks. We've got to see how it works. And one of the kind of getting back to why we are trying to be national and why we think a big firm is a good solution for people. There's a lot of big lenders out there, big brokerages, and they need a one-stop solution too for their systems. Like, they want a consistent client experience on all accounts, right? If you're doing 30, 60 loans a month, you need to know what's happening on the other side of the line, right? And one of the big things that we've been doing, as you guys know, is integrating our systems with theirs from a tech perspective. So that's the next step. Once we run through a deal, we start seeing how we can get some efficiencies going, especially if it's a volume lender or client.
Very interesting.
Well, that's how we actually started chatting, right? It was through the technology piece, I believe. And, we had heard through the grapevine you had a great piece of technology to help speed up the process from actually, getting the deal in to getting it closed. And, obviously with our technology, we thought it would be a great fit. So, we've just recently, I believe, completed our integration with your software.
Yeah, part of our strategy here is part of what we want to do is create efficiencies and do it, kind of make a better mousetrap, right? Do it a little bit better. And we actually have our own software firm just dedicated to us. It's 3 full-time developers developing our software all day, every day. What we have, the software we have is called Next Era Hub. We call it Next Hub. And it sort of connects what we do to run the file with all the different pieces of that file. Mortgage instructions from a bank or a lender flow in, and client information is all kind of part of this hub. Documents exchanged, status updates, and things like that. For the integration with Mortgage Automator, what we did, it's as simple as, if you're a private lender and you normally instruct your lawyer, the way that used to work since before we reinvented the wheel, is you would send an email to the lawyer. The lawyer would start putting it into his computer systems. If he saw it, he'd open it up in 2 or 3 different places, and then he'd eventually instruct the file. He'd send a letter out, and then send out instructions. With our system, and with the integration with Mortgage Automator, all the information they have in Mortgage Automator, or all the pertinent information, with a click of a button, will get pumped right into our system, instantly open the file. It's a pre-programmed introductory letter for each individual lender that goes out directly to the borrower's lawyer immediately. The clerk on the file is automatically assigned based on how much availability everybody has. The lawyer is automatically assigned, and everybody has all that information the second somebody clicks the button in Mortgage Automator. And as the file progresses, updates are kicked back also. So, when were instructions sent out? When did we get documents back from the ILR? When is the file closed? And we even have the functionality to update the broker at the same time, right? So everyone knows what's going on.
So actually, I want to touch on that a little bit. It's quite interesting because what you guys have done is you found something in the industry that had a little bit of a clog in the system, which is the delay from when a lender sends their lawyers instructions, by the time they get to it, by the time they open the file, assign a clerk to it. In this industry, especially in today's world, with how competitive things are, it's all about expediting the legal transaction, because now you're putting this transaction in somebody else's hands. For the first time as the lender, it's not up to you to decide how quickly this can close. And I think that by doing what you guys are doing, you're letting the documents go out much quicker. And the other thing I do want to touch on, which I think is game changing for the industry, is talking to all the automator clients. The one part of the process that they feel like they're sort of kept in the dark on is the legal process. Even if they want to reach out to the lawyer and their lawyer's on speed dial, they're still at the mercy of the other side. They have to get the clerk to call the other lawyer to find out when the appointment was set. But the way you guys are doing it, essentially all that information is being streamlined and passed back down to you, which in turn is being passed down to Automator, which in turn is being passed down to the lenders and the brokers. So everyone's being kept in the loop throughout the entire process. And I think that is something the industry needed for a very long time. And we're very excited to be doing it with you guys.
Yeah, I really think it's the holy grail of like where this is all headed, even if it was a institutional lender, it goes to the lawyer's office and it's a black hole, and it's just because of the way lawyers' offices work, they're not really set up for connectivity. Like it's even for us, we spent a lot of time connecting our system to something called Unity, which is software that most real estate lawyers use, so that when the mortgage instructions come in through Unity, when the title insurance is finalized in Unity, when the searches are done in Unity, like the title searches and all that kind of stuff, all that can get we have an API with Unity, and all that gets pulled out into our system, and we can put it wherever we want. We can pump it right back to a CRM that a brokerage has, or Mortgage Automator. Our integration is starting with data, but there's going to be a lot more stuff that we can send back and forth. Even title searches. Imagine a private lender it's just not too far away before we start doing title searching for private lenders directly through a hub, right? You don't have to call up your lawyer, by the way, can you send me this title search? You click a few buttons and you get back the title search. You know what I mean? That's where this is heading.
Yeah, no, it definitely makes sense, and I think that the industry needed some like transparency is maybe the wrong word, but just vision, right? Like there's so many spots where you don't have that vision and you don't know what's going on. So I definitely think this is a benefit. And I think that as time goes on, it's going to be, something that's going to be like, you're going to have these systems in place because everyone else will have them and you're going to be the one left out.
I think Joe's creating an industry standard, to be honest. I think he's creating the new industry standard. with the way that legal transactions should be completed, just because it saves the lawyers time, it saves everybody time, it can potentially keep costs down. There's full transparency all along the process. I don't see why the industry should be still doing things the way it was doing them 30 years ago.
You know,
And
it's also human error, right? It's not just about time; it's doing it better, right? If you send special conditions through Mortgage Automator, if you send the interest rate, like I'm not going to accidentally put a 4 instead of a 14 when I'm putting that information into my system to generate the documents, right? Because it's going to be pushed through electronically. So it's you know, reasons abound for sure.
What's your average turnaround time to get deals, you know, out the door and closed? And I know that you obviously have to rely on the other lawyer on the other side and the borrower. When are they coming in to sign? But I mean, getting instructions out. If someone instructs Diamond and Diamond, how quickly do those instructions go to the other side?
So I usually like to tell people 24 hours, you know, is the upper limit. If the deal is, you know, very far out, then maybe we won't rush to do it in 24 hours.
Right.
I have some lenders who insist that I instruct within 4 hours, you know, and it depends. I think it really depends on the lender's model in particular. You know, some lenders like the initial letter to go out right away, and then they don't care when the instructions go out. And my philosophy was always, we want to reflect what the business practice of the lender is. And again, that's we do that with technology. I know when a file comes in from a particular lender and which letter then automatically has to go out, because it's all pre-programmed and there's no mistakes, you know?
Yeah.
But yeah, so I think 24 hours is probably a good number. I really don't like sending preliminary letters. It irks me, you know, when you get these long templated letters of all the things that the private lender's lawyer needs to do before they'll even look at the file. When we started doing private lending, I said, we're not doing this. I'm going to do the title search. I'm going to pull the last instrument. It'll cost the borrower the $4, and I'll know if they were married or not. You know what I mean?
Right.
And that's it. And I'll send out a full package of instructions right off the bat, and then they can go and do what they need to do. You know.
Sorry, you touched on something. Do you find that you're doing a lot more of the work, whereas some of the firms will do the basic stuff and put everything back on the ILR? Because I know you guys wear both hats and you do represent borrowers as well. But do you find that, as if you're representing the lender, you're doing, let's say, 85% of the work, 90% of the work, just because in your world, you feel it's just easier to get it all done as quickly as possible without having to waste time going back and forth?
Most of the time, yes. Most of the time, we're ordering a statement, we're ordering the tax certificate if we need one. Yeah, I just, the ILR side is so inconsistent that it's going to be my fault if it's not done on time. So we just take charge and just solve the problem. And you know, on the ILR side too, like we try to get ahead of it. One of the things we've done for a long time in the broker world, but also in the private lender, like on the ILR side, is we try to speed up the timeline. So we don't need mortgage instructions from Scotiabank before we can start our file and do, you know, the basic information, get the client, you know, to sign our retainer agreement, send us their IDs, void check, you know, are they married? Are they not? Like, we can do all that stuff even before mortgage instructions come in. It's the same thing with an ILR. If I have a copy of the commitment before the instructions come in, I could do a lot of that work in advance. And that way, by the time I get instructions, all we have to do is sign up the client.
Right.
And, you know, it's only 2 days, but 2 days when people are expecting a certain amount of money to come in makes a big difference.
That makes sense. You said earlier, you know, every time you get a new lender, you like to review their documents. You'll just make sure you understand what's going on. What are some things that you find that people are leaving out of their documents that should be there? Is there something specific that over and over and you're like, I don't understand why these lenders don't have this one line in here that could protect them? Or or on the other side,
yeah, the other side,
you know, things that they have in their documents that are like, this is just ludicrous and it's never going to pan out for them and it's going to be a problem.
and it'll
Is
never
there
hold
stuff
up
that
in
you
court.
see?
And yeah,
Yeah, there's stuff that you see on either side.
100%. It's the fees. It's all of the default fees. I've heard it all. Sometimes people put it in there, they know it's illegal or they know it won't fly, but they just want it in there so the borrower knows that that's what they're thinking of doing if they defaulted, and that's their hammer. But the first thing we look at is what fees they have listed, and what fees they don't. And sometimes even the wording matters greatly. You know, some of the penalties, if you don't word it right, you won't be entitled to charge it. And when push comes to shove and it goes to court and it's contested, you won't be able to defend it. But you could if you worded it right. So that's probably the number one thing we change in most people's commitments.
You know, obviously you represent the lenders when you close the deals. You mentioned at some point you have the litigators who will go to court and deal with the litigation side of the power sale. So you do offer a full service shop from that perspective, correct?
Yeah, the first thing all of my lawyers who come from other firms notice, and that I noticed the second we merged with Diamond and Diamond, is when you can actually CC litigation and they're in the office right next door to you, and your name is Diamond and Diamond, they know you're going to sue them. It's not a bluff. When you're a regular real estate firm and you're CCing litigation, like everyone knows, that means that maybe it'll go to litigation, maybe it won't. They've got to get a retainer. It's like a whole thing, right? That lawyer doesn't do litigation. Diamond does litigation. So I noticed right away when I started sending out demand letters or anything like that, people just like back down now. You know, I don't actually have to send it to litigation. We just send that letter. So yeah, for sure. And in particular with fees, you know, whether an ILR is contesting the fees or we're on the ILR side and we're bugging the lender about fees, like they know we'll sue. And even the reputation that we're kind of every man's law firm, like a little bit of a blue collar, not blue collar, but accessible law, sort of how we like to do it. Like we're not gonna, our retainers aren't gonna be $10,000, $15,000. They're gonna be $2,000 for litigation, right? So because we have that reputation, even the lenders think that when we're on the ILR side, we might actually sue them. You know what I mean? Whereas you might dismiss an ILR as somebody, you know, maybe they don't have money to, or maybe they don't have the inclination to go hire a lawyer. They already hired Diamond and Diamond. We're ready to go, you know?
Right. That makes sense. That makes perfect sense. What's your view on the 3-month penalty? Right.
And how it's being enforced these days.
Yeah, I mean, I hear like you can get it, you can't get it if it goes to, if the loan's in default and then you sell the house, you can't get it. Like what's the deal with the 3-month penalty?
Or your view on it, at least.
Yeah, so this is not legal advice.
No, of course not.
Without prejudice,
Yes.
Joe.
So we get it, we demand it. Like if the wording is right, depending on the situation. So that's one of the things. The first thing you always want to make sure is that if you are going to note a borrower in default, or you are going to start a power sale, that your commitment foresees the actually says that you can charge a 3-month penalty in that situation. If it just says you get a 3-month penalty for this reason, that reason, or whatever, that won't hold up.
Mm-hmm.
But if it specifically says in that situation that you get the 3-month penalty, I think you have a chance of getting it. I'm not going to say it's 100% chance because it does depend on the judge sometimes, and on the other lawyer and you know how hard they fight. But if it's worded properly, you can I think you can get it, and I don't give up demanding it unless the client instructs me specifically. So that's how we approach it. And then on the ILR side, I'll fight tooth and nail. You know, I'll break up their wording most of the time. Because I think that's really what it comes down to. That's where the cases fail or succeed.
Acting for the lender, you're explaining why they're entitled to it. Acting for the borrower, you're explaining why it shouldn't happen. So like any good lawyer, right? You're going to read what's in the document, and
Try to find a loophole.
if yeah, and if you're acting for the lawyer, you're going to make sure that that document is, rock solid, and you've gone through line by line to make sure that they more or less will receive what they believe they're supposed to receive. Obviously, there's the anomalies that a judge throws something out, and that's part of the game, I guess.
I wanted to ask Joe something. So, COVID's new. It's interesting. How has it been dealing with power of sales during a time like COVID when the courts were closed, obviously in the beginning, creating a backlog? Would you say certain regions like Toronto are more backlogged than, let's say, Peel or York region? And how have you guys been dealing with that?
Well, they did. Wait, before you answer, so with this lockdown, they just said, once again, you cannot enforce right now, right? You can't kick someone out of their house.
That's I'm not 100% sure, but I think that's only residential. I don't know if that's the current lockdown. I'll tell you, we have so I don't do the power sales myself. I'm obviously involved in them.
Right.
But we have a litigation team. Like you don't want to do litigation just alone. You need a lawyer, you need a junior lawyer, you need a clerk, you need a paralegal. Like you need a whole system. So there's we have a department that just does private mortgage enforcement work. They've been very busy. Definitely busier during COVID than they were before. There was that scary backlog where we were back, a month or two, and like I was telling people at the time, that's how you have to underwrite your files. You have to underwrite that extra couple of months when you and take into consideration that the power sale will take longer. Now, not at all. There hasn't been any slowdown. We haven't had any problems. It's pretty rare in general that we have to kick somebody out of their house, that we really need a writ of possession. It's like 1 in 10 maximum, right?
Yeah. I don't see it ever really going the full mile. I always feel like they get served their documents. They have some time to defend the documents. They then take that time to either refinance because they have enough equity to do so, or they realize they're pretty much not in a position to make payments, and they end up negotiating with a lender. We tend to see actually a lot of privates, especially during COVID, have been more willing to work with the borrowers to allow them to sell their homes on their terms in a very decently rising real estate market. So you don't really see a lot of them going. I don't hear from a lot of our clients about things going all the way these days.
Yeah.
Private lending is sort of like the canary in the coal mine. It's the first sign that things are going south, and it's not usually how it ends. It's been going fine. The courts haven't slowed us down. In fact, the litigators love it. They don't have to go in.
Makes sense. So one thing that we've found over, I want to say the last even 6 months, is there are a lot of new lending companies popping up. People are coming to us. They're saying, hey, I need a software platform. I have no deals currently, right? I'm just raising money, or I have money. I'm about to start. For those types of companies who maybe don't have a legal firm yet, why should they choose Diamond and Diamond over maybe some of the other ones? Is there something specific that you can point to say, give us a shot because of this?
So I'll tell you, personally, I've been involved in many private lenders who've started up. I'm not going to say I taught them how to do it, but I definitely was an integral part of their team as they were building up and figuring out what they want to do as a private lender. I always, whether it's for all of our referrals and our clients, I like to think that we're partners, exactly because we don't bill by the hour. Like, it's hard to pick up your phone and call up your lawyer at McCarthy, who's going to charge you $650 an hour. My clients are texting me, they're asking me quick questions, and I don't care because I'm servicing the deals, right? So I really think that part of the reason we attract private lenders is because we really try to be their partner. And we've seen it all. Like I think there's very few firms who've seen as many private deals as we have, on both sides. Like it's hundreds a month, right? And you get a sense, you know what's working, what's not working, and I think that's a lot of why they come to me, and our private lending team. All the lawyers who work in private lending, it's all they do. They don't do other things.
So the accessibility, the experience, if something's going on, you've probably seen it before. You know how to handle it.
Lawrence, they've got their lawyer on speed dial.
And what is it? 24 hours a day, Joseph, or what's the cutoff?
We actually, I think we're one of the few residential firms that have an on-call system. In suits, you have to be available at all times. We actually have a rotation among our lawyers. So we're 10 lawyers, and everyone has to take a call once a week. One week at a time. We do after hours in the evenings and weekends. So yeah.
Oh my God, I was kidding.
Yeah, so was I. I didn't realize that. But
when people have a status certificate to review, it's now because they're going into an offer at 8 p.m. It's not I need it tomorrow. You know what I mean? It's the nature of the business. So if you want to win the client, that's how you have to do it.
So if a lender wakes up in the middle of the night with the sweats because he thinks one of his deals is going into power of sale, he's got someone to text or call. That's great.
Well, with the caveat, we do sleep. So
you do sleep. No, that's great.
I'll just say the area of real estate law I like the most is private lending. I find it such an interesting area, and there's so many different things you can do. When I first started doing it, one of my clients told me, he said, the words ring true, that, the regular garden variety stuff, that's gonna pay the bills. That's like tax returns, you know what I mean? But private lending is where you'll feel like you're living and you're practicing law. And really, that's really what it is. You roll up your sleeves and you get into it. And it's always a different situation, and the nuances, I think, from a legal perspective, are very interesting. Everything from, like you were talking about, the 3-month penalty, to how you word the actual charge is very particular, and I really enjoy it. So that's
well,
that's how
I think that's a great way to end off. Again, Joseph Berljawsky with Diamond and Diamond. They are not just a personal injury firm. They are one of the largest residential or real estate driven law firms as well. And if you are getting into the private lending space, if you are currently in the private lending space, and you have a lawyer, maybe it's a rocky relationship that you have, give Joseph a call, give him a shot. I mean, give him a deal, see what the process is like. A lot of our clients do use Diamond and Diamond. I was surprised to hear it at first. Now I understand. They have the technology. You can get that transparency with what's going on in the deal, where the deal is at. If you have borrowers that don't have lawyers, they also do ILR. And if you're plugged in through Automator, you can get those live updates with, when the borrower is signing, what's still outstanding. I think it's a great partnership. We love having a partnership with you guys.
We're very excited about it.
We know we're excited about it. We know we're gonna keep growing it over time. I guess that's the deal. Joseph, thank you so much for stopping by today. Really appreciate it.
Really appreciate it, Joe.
Thank you guys. Really appreciate the partnership also. And we're very excited to see where it goes.